Nvidia passes Microsoft to become the most valuable company in the world. I'm Lisa Bernhard with Reuters, and joining me today is Melissa Brown of SimCorp. Melissa, as you and I are speaking, we're still a couple of hours from the market close, but Nvidia shares are rallying and it has passed Microsoft as the world's most valuable company. What do you think of its latest milestone?
It's a bit surprising. They certainly are in a business that should have substantial growth. And obviously investors are already accounting for that. What my concern would be is how long the growth can be sustained, and are the valuations reasonable enough that we wouldn't have to have a huge growth or very prolonged growth to really be able to justify buying the stock.
Melissa, it's funny because a lot of the stocks grabbing headlines like Nvidia and even GameStop, of course, a meme stock we think of as being highly volatile stocks. And yet you say that volatility is unusually low. Why is that a problem for the market right now?
Well, I think the low volatility has been kind of maybe luring investors into a false sense of security. Also the reasons, it's not the low volatility itself that's so bad, it's the reasons that it's so low. So you mentioned Nvidia, and I think historically that has been higher than average volatility stock, but I think more recently it's been just ticking up very slowly. It moves up like a little bit every day, and that actually moves it into the low volatility category. It's also moving, so there's a few other stocks that are driving the market. The market is very narrow. Over the past few weeks, we've had maybe 30 or 35% of the US stocks actually beating the market, which is very, very low. But what that means is that because a few stocks are doing well and a bunch of stocks aren't doing as well, that correlations between stocks are actually low. And because of that low correlation, and then combining that with this ratcheting up of stocks like Nvidia and a few other names, so volatility is low, that makes overall market volatility relatively low, but not on kind of a solid basis. We're also seeing that trading volume is relatively low. We had a spike in April when the market went down, but then things settled down. So it does suggest that investors are kind of more in a buy and hold mindset. They're holding what we see as the stocks that tend to be more profitable, larger cap stocks, stocks that are crowded, and that they just kind of continue to go up without a huge amount of trading activity or rotation in the market.
But outside of tech, there is another sector that is doing surprisingly well, right?
Well, what I think is interesting is the second best performing sector, at least over the past 3 months or so, is utilities, which is not really a sector you would pick out as the one that's going to do well when rates are relatively high, and inflation is relatively high. Even though inflation has come down, that's not necessarily the sweet spot for utilities. And I think what kind of puts utilities in a similar camp to information technology, which has done really well also, is that to some extent they're both being fueled by AI, or at least by the expected impact of AI. So for utilities, it could be just that as more and more companies kind of try to adopt AI strategies, they need more computing power, and therefore they need more electricity. Another potential reason that I've heard is that utilities themselves are adopting AI type strategies to improve the efficiency of their operations. And so I think both of those things have moved utility stocks perhaps in an unexpected show of strength.